David Lipton, thank you for joining.
It's good to be here.
The IMF World Bank meetings have just concluded. What has really changed in the global economy since the last meeting 6 months ago?
Well, recovery is continuing. I think what's changed is that growth is more divergent. We have different country situations. And that comes in large part from the fact that the two big changes since last October are that the oil prices come way down, so you have winners and losers, and the dollar has appreciated against the euro and the yen, and so that has positive effects for some and negative effects for others. And so in analyzing the situation of individual countries, we have to look at who's been affected in which way by those two events. So there really isn't a one message fits all prescription right now.
Can you give us a sense of the overall official discussions?
I think there was a strong coming together behind the need to strengthen global growth. That's a common theme. I mean, that was the theme last October as well. But this time what was new was a very strong emphasis on the need for structural reforms. And the reason for that, I think, is that people have internalized the message that came out of the WIO, the analysis that shows that potential growth rates appear to be slowing in advanced economies and perhaps even more so in emerging market countries. So there's a sense that there's an opportunity now. The world is not in crisis. Growth is underway. Countries should move on to the structural reform agenda very forcefully.
The World Economic Outlook mentions that the macroeconomic risks are decreasing while the financial risks are increasing. First of all, what are these risks?
Well, there are a range of risks. I think the GFSR explains the risks in some detail and has it right. There are risks around the normalization of monetary policy in the U.S. at a time when monetary policy in the Eurozone and in Japan remains very forceful. So the asynchronicity is moving exchange rates, and that creates a risk. There's the risk that normalization in the United States could surprise in the one direction or the other. And then there's a rotation of risks, and it's really an important change in risks, that while we were focused on the risks in advanced economies, we're a bit more focused now on the risks in emerging market countries. Where we were focused on the risks in banks, we're a bit more focused on the risks in non-banks. And where we were focused on institutions that might have solvency problems, we're now more focused on markets that may be illiquid.
Going into the meetings, the message was, global recovery is underway, but it's moderate and uneven. In a tweet of 140 characters or less, how would you capture the outcome of these meetings?
Everybody has to do what they have to do, but they have to work together too.
Thank you very much, David Lipton.
Nice to talk to you.